Hello there, traders. Hello there, traders. Welcome, and hope you guys can hear me loud and clear. Now, today is the 24th of October, 2022, and welcome to today's week ahead review. It happens every Monday at 11 a.m. 11 a.m., usually Cyprus time, but we're running a little bit late, but we've got lots going on in the market. So I would wish to update all the traders globally on certain happenings, and then we'll get straight into understanding what would actually be driving the market forward for the whole week. Now, the US dollar, I'll just begin with the DXY index. A lot of you may actually wonder what that is. The DXY index, or the USD index, is an index that has a collective of 6 currencies in comparison to the US dollar. So it is quite a gauge or an indicator of the US dollar. And I usually take a look at that as well, especially for now that we are actually going through, loads of happenings that are actually increasing the rate on inflation, and inflationary mode is actually sweeping across globally. And we are just wondering what is going on with most of the countries. It has a rippled effect on inflation onto Asian currencies first, and then now it's sweeping across into causing more impact to the European economy and the European countries within the Eurozone especially. So we're looking at very important levels as well, key crucial levels technically. We're also looking at numbers that are actually announced by central banks, and then we are combining both fundamental and technical to look at what is the best way of picking the right pair for the day to actually trade instruments that are actually being moved by the big boys as well. So the US dollar index, back to the DXY index, it basically took a breather last week, meaning that it has actually decreased its levels to the downside, falling around 0.75% as the policy-sensitive 2-year yield lost its steam. So what that basically means is that it has actually been increasing the US dollar, but now it's been losing steam. So whether it's a correction or a change of trend, we don't know that as yet, but we are just spotting trading opportunities. Now, on to the Federal Reserve, or the Fed. Now, the Fed entered a blackout period on Saturday, just about 2 days ago, on Saturday during the weekend, which forbids FOMC members from commenting on monetary policy before the November 2nd policy meeting. So we've got a huge event on policies in a meeting on November 2nd, 2022, right? So that basically will not actually have any commentary out in the open through mainstream media, mainly because of that blackout. Now, whether it's a planned blackout or not, we don't know that yet. So rate traders see a terminal rate of around 5% early next year, leaving plenty of rate hikes. That means upwards movement for the rates, and that also tells us that there's this inflationary mode sweeping across, and it's only getting stronger. So that's basically on the table between now and then. Now, the US is set to see updated purchasing managers indexes from S&P Global. Now, US factory activities has remained stubbornly strong. Now, that doesn't actually help the inflationary mode, of course, or the mood, with a Fed report stating that factory production utilization hit the highest level since 2000. Now, the consensus estimate sees manufacturing PMI, or the Purchasing Managers Index, for October remaining in expansionary mode, or in expansion territory, at 51.0, according to a Bloomberg survey. Now, quite a busy economic calendar today for a Monday. Basically, we've got Chinese data, European data, as well as data from the UK. Now, this is to watch out for. But again, I would like to remind traders that when we actually look at data or coming out from a specific country, we would like to use a triangular kind of a model to actually connect the dots. What I mean by that is basically we are going to now look at economic calendar, and then I would like to brief you onto how one data connects, or a country's data connects to other countries' movements. So let's get onto my screen share at this moment of time, and then we will be able to go onto the 10 Academy dashboard. Now, this should actually be your first stop when you're about to actually thinking of trading. And basically, there's a lot of traders, they've got a little bit of a confusion between a trade setup and a trade plan, and also a trend analysis and a technical analysis. They are all actually very different. But what I can tell you is to keep it really simple. Do not enter your chart until you have got a bit of an idea outside of the chart through news and through tools, as you can actually get it from 10 Academy, to be able to analyze a market fundamentally first. Now, you would need to gather information fundamentally in order for you to understand the fuel of the market that would be fueling the directions and the trend of the market. Now, once you understand the trend, and then you know the major directions of major currency pairs, or basically, let's say the DXY itself and various other instruments that could actually be more useful and more important tool for you, like an indicator or a future indicator or a leading indicator that will then give you an idea of whether or not it's a risk off or a risk on environment. So when we get onto the 10 Academy, you've got the news section right here. Now, what we can do is, once you have clicked on it, you'll get this whole stream of information, especially breaking news from various sources. We've got a big range of sources that are available through the news section. So once you actually click on that, you've got all of it coming through from forexmirror.net, and forexmirror.net amalgamates all these sources of news, breaking news especially, that would actually matter to you as a trader, you and me and everyone in the retail Forex trading environment, to be able to use this news section as a right type news that would actually move the market through all the instruments that are available on a Forex platform. So this is basically it. Now, we have got the news section right there, but the other very important section is the tool section right there as well. Now, I've clicked onto my news section. We're just waiting for it to actually just pop up. It does actually depend on connection. It looks like it's all good to go. So what I'll do is just to wait a little bit. As you can see, you've got Forex Mirror right here, and just in another couple of seconds, I hope we will actually see this whole boxes that would actually pop up, and these boxes are news sources, breaking news sources, and they started off with the Eurozone, as you can see right here. And when you click on it, you can actually read on it more. But what we are most concerned on is from where these news are coming and what are the main headlines. Now, we've got Eurozone PMI composite dropped to 47.1, and that is basically a drop that they have actually signaled right there. We've got Euro USD. Again, we have got news on Euro. We've got news on USD JPY. They talk a little bit about the German top 40 stocks. So that's again within the Eurozone. We've also got gold's prices right here. It is saying that it is correcting lower from the 1,670 US dollars level. We've also got some news right here on the GBP USD. So we could literally see the focus has actually been on Euro this morning, and these news are updated every couple of minutes, 10 to 15 minutes. So these are quite, we would call it breaking news, but quite recent and updated news as well. So we want to look at the Euro, of course. We want to also match whatever that we can actually see as a focus onto the news, and we want to actually match that with what we can actually view onto the economic calendar. So we've got the economic calendar right here as well. It comes under the tool section. So if you're lost at any point of time, you can just click onto your dashboard right here. Or if you see that you have got the title right there, tools, you can just click onto tools. So When we click onto the tools section right here, we would actually be looking at the economic calendar, especially as well as the Forex heat map, which are the most crucial tools that I would actually start off with within the tools section. Of course, we have got all other fantastic tools as well, like the market data. We've also got on cryptocurrencies as well as technical analysis right there. But we have got the economic calendar and FX heat map. This is really very important. So let's take a look at what is in store within the economic calendar in terms of data releases that are of medium to high impact. So this is it. We have got the timings right there. We've got the flags as well. What's important is to look at the orange lighted up fire symbol right here, as well as the red one. Now, red signifies high impact, high volatility of highest importance as well. So here we could see that from the US, we have got the S&P Global Composite Flash Index, or the Purchasing Managers Index right here. And we can see that it's got a prior number of 49.3. It has been expected to increase a little bit more due to the inflationary mode, as well as everything else. It would only add on to the fire of inflation. So S&P Global Composite Flash right there seems to be the crucial ones. Of course, we have got several medium impact news releases, Flash Composite Manufacturing and Services PMI from the UK. That is actually what is expected for today. And we're just going through what's expected for today, first being a Monday. Now, from what I've actually looked at the economic calendar for, I've noticed that today seem to have, quite a reasonably busy economic calendar, not like the other Mondays. Most Mondays, it's quite, Mondays blues, as they say, and it's, usually take into a lower or a breather type mode, but then not this Monday. Now, today we have got quite a number of expected releases as well. As we can see, October 25th, tomorrow, Tuesday, we have got another range as well, but we have got economic data releases that are of medium impact coming from Germany tomorrow. That does include the IFO business climate, right down to the IFO expectations index as well. So that is coming out from Germany, impacting the euro in general. And as we go lower, we could see that we have got the CBI business optimism index as well. Coming from Italy, we've got from not Italy, but Hungary, we've got the Hungarian base rate as well. So we've got a couple of I would say countries within the Eurozone that would actually impact the movements of the euro. Now, I would like to go onto the chart and give you some insights into what I've noticed onto several pairs as well, especially with price action, previous mother candles, and various others. So we can then tie in both fundamental and technical analysis, as well as trend analysis before your technical analysis, in order for us to pick the right pair, but understand the trend that it has from short, medium to long term. Okay. Now, let's scroll down a little bit more to October 26th, Wednesday. We've got several New Zealand on Wednesday. We are expecting New Zealand numbers, New Zealand data releases, for especially the CPI indexes, both quarterly and yearly as well. And that's been categorized as high impact. So we want to watch New Zealand dollar, of course, Australian dollar as well. But just to give you a little bit of a hint, we have had a big event that have happened on Sunday, yesterday in China. So we've got the electment of the president. Basically, the Chinese president have actually been voted again, re-elected, and he's now has got a stronger position in China, and that does actually impact Chinese economy quite a lot. And with that, as I've mentioned earlier on, we want to have a triangular type mode connection with whatever happens in a specific country like China would most probably be impacting both Australian dollar and the New Zealand dollar as well. So we want to take a look at that triangular type connection as well, especially when we are looking at numbers coming out from China, and then we have got more that are expected as well to get into the headlines in the news about Chinese economy, about Chinese plan, about the president's plan. So I would think usually when we have got events like this, possibly we are only going to be listening to positive news coming out of China. And does that then would actually encourage a reversal type movement in the charts as well for both Australian dollar and New Zealand dollar. So that is what we have to be very, very aware of. And this is what I will be guiding you through today through that. Okay. And that is for October 26th. As we scroll downwards, we have got further ones right here on other European countries. As we go into Thursday, or have I missed Thursday ones? That's October 27 on Thursday. We have got the Japanese foreign bond investments. We've got several medium impact news from Japan. And we want to take a look at that. And again, we've got Chinese data as well, but we have got the German's GfK Consumer Sentiments Index happening on Thursday, and that is categorized or has been categorized as high impact. So we want to take a look at that. We've got unemployment rates coming from Spain as well, categorized as high importance. And as we scroll downwards, let us just take a look more on several others. Now we've got one that's been highlighted coming from the Eurozone, the ECB deposit rate and the refinancing rate that's categorized as of high importance. And that is something that would actually move the market, especially for Euro crosses. Now, we've also got initial jobless claims coming from the States. That comes later after the deposit rates of the Eurozone. And with that, we have got other news as well. But then as the market ends on Friday, we're looking at Japanese unemployment rate categorized as high impact, but we have got also CPI Tokyo's data coming out as well at the same time. So I would think that on Friday, it's quite essential to keep an eye on Japanese crosses, Japan in general in its economic standpoint at this moment of time as well. So I would think that we've got a fairly, I would say, moderate to high impacted market this whole week. And we're looking at loads of potential for trading, of course, but picking the right pair, understanding the trend beforehand would actually be of great importance. So with that, let us focus on some of the tools that we can actually then gather all this information in order for us to understand how do we actually pick the right pair for today and this whole week to actually trade on. Okay, let's move on. Let's move on to the tool that I've mentioned, and you can always click onto the tool section right here, and we'll go into the FX heat map just to give us a bit of an idea of how this whole environment of inflation is actually gathering momentum at this moment of time. Now, it looks like we've got a little bit of a glitch going on at this moment of time. Now, okay, so just so we are not stuck at that section while it actually refreshes, I'll just go on to the top mover section of Action Forex right here. And just to give us a little bit of an idea, because once we have actually gone on to, let's say, just get that. Okay. Second. Right. Now, right here, as we can see, we've got today's market movers or top 10 market movers, and we could see that we've got more focus on the JPY now. I think earlier this morning as market opened in Asia, there was a little change, but then we have got all the Japanese yen crosses now seem to be dominating, and we've got the USD JPY as well as the GBP JPY. But as we move to the right side, we don't really see excuse me, 4 dots on them, and we have got, we need to actually then be a little bit more sure and combine what we see onto the top 10 movers with the heat map. Now, when we go on to the heat map, for example, let's just try that again. Tools section right here, and we go on to the FX heat map. Let's just see whether we have got a better connection on this one. Brilliant. So right now, I would always revise when we go on to the heat map, just so that everyone would understand that this wonderful tool could actually be used very, very easily. It's very simple to use and very easy to understand. So we've got Forex heat map right here, giving you a bit of an idea of what are the strongest trend from which currency pair. And this would allow us as well to conduct a trend analysis to pick the right pair for a trend analysis. And this is where it all matters, because it starts off with a base of your whole research and analysis as well. Okay, so let's start off with always looking for a highlighted straight row of reds or greens. Now, greens are your bullishness, red are your bearishness. So here, for example, we have got, let's say we will always start off with currencies on your left panel. Now, on the left panel right here, you have got all the Euro USD and all that, and the same goes for the top panel. But you would need to start off with the left panel right here. And let's say I've noticed that we have got lots of reds, most highlighted reds as well, coming from the AUD. Now, so what that means is AUD seems to be moderate to strongly bearish compared to all the other currencies, right? So once you have got that standard sort of a uniform squares highlighted, whether it's all red or all green, almost all red, almost all green, then you will start off with the biggest number. Now, the biggest number that I can see here is 1.58. We've got 1.17 right here. We've got 1.4, but 1.58 seems to be topping the chart, but then it has just increased to 1.61. So that gives me a signal that AUD against GBP right here, or if you go onto your platform, it's GBP AUD. So AUD is the weaker one or the more bearish one compared to the GBP. So GBP is expected to be on the rise. So you can actually see that when you go onto GBP's rows of boxes, you can actually then see that it's mostly in green. So with that, it's got a little bit of an idea, or it hints us that probably GBP AUD is good for us to actually take a look at in order for us to do a trend analysis. Now, in saying that, when we combine that with whatever that's been going on onto the news as well, we've got news releases coming out. Of course, they're waiting on for the new Prime Minister, as Truss, Madam Truss, have actually just resigned. So this is giving us the opportunity to actually look at all these news coming out from the UK as well, to look at whether or not it is actually going to maintain that bullishness. Would that be a bullish type news with sentiments that would actually encourage, confidence in the economy and things like that? So we need to always they say play by ear, but then also understand that you need to combine various elements in order for you to connect the dots properly between fundamentals and technicals. So here, as we just go on to GBP AUD, it will give you a better idea of how do we actually connect that fundamental side of it and the technical side in order for us to have a pair that we have chosen to trade, whether on the buy side or the sell side. But before anything else, to understand that we need to pick the right pair for the day. So GBP AUD seems to be one that we can pick to do a trend analysis first, in order for us to then decide later on whether or not it's an ideal pair to enter the market with. Okay. All right. So let's start off with GBP AUD, just so that we get a bit of an idea of what to do our further analysis on. As we click onto that, GBP AUD right here, let me just check. probably have missed it a little bit. Give me a second. GBP. There you go. All right. What I'll do is just to clear out all the object list right here so we can start afresh with a clean chart or a cleaner chart. So there we go. All right, there we go. And now as we look at it, look at the chart right here, GBP AUD, we're looking at it on a 4-hour chart. The current price is trading at 1.7980s area. So it's really close to the psychological number of 80 psychological number. As I can see on the 4-hour chart itself, it looks like there's a little bit of a weakening taking place on the upside. But what is important for us to do is to conduct a trend analysis. And with that, now it's really simple to do, very easy. You'll start off with your 30 minutes or the 1 hour. I'll start off with the 30-minute chart. Make sure you apply the 50, 100, and 200 exponential moving average. Comes under the category of moving averages. No other changes. You can always change the colors that you want, just so that you are aware of which line is, which EMA. So here, for example, we have got the dark blue one is the 200 EMA, followed by the 100 EMA, and then the lightest blue one is your 50 EMA. So what I would like to know when I have applied this 3 EMAs and when I'm conducting a trend analysis is to look at the position of the candles and the way the 3 lines are moving. Now, if the 3 lines are moving like what we are looking at right now on the 30 minutes chart, it is showing us unpredictability or uncertainty in its trend. Now we've got all the candles above all 3 lines, which usually indicates an upward type bias or bullishness, but the 3 lines is not giving us that similar. It has to match with the movement of the candle. It has to also move up like the candles, and the candles has to be above all 3 lines, and the 3 lines has to be following and going skyward by not being entangled to one another as well and pointing upwards. Now, if you get that picture, then we have a smooth, clear uptrend. But at this stage on a 30-minute chart, it's a mismatch between how the candles are moving, skywards, but not the 3 lines. So here we'll just move on to the 1-hour chart, and we know that there's just no trend. It's a bit uncertain, not very clear trend as well for the GBP AUD on the 30-minute chart. But what we need to do is to collect all this information to find a match and to find at least 3 consecutive time frame to give us similar picture. Okay, so here on the GBP AUD, for example, we get that same type sentiment, which is uncertainty. Why? Because we have got the uncertainty of an upward movement by GBP AUD. The reason for that has got several reasons, but one to look at firstly are the 3 lines itself. The 3 lines just moving the same way like it has moved, or they were moving the same way in the 30-minute chart. And then we've got candles all up and above pointing skywards. But as you can see, the current candle on the 1-hour chart as well has got a wick that is lengthening to the upside. When you've got the longer the wick is on the upside, the weaker it is the movement to the upside. This is what it means. Now, here we are also looking at prices at 1.7977. As I've mentioned, it is really close to the 80 psychological number. As price falls, it would also be bumping into the 50 psychological number. So what I would do is to carry on with the trend analysis on 4-hour and daily as well, just so that we get a bit of an idea that it has an uncertain type movement that started off with 30-minute chart, 1 hour, and now on the 4-hour chart, it is still the same thing. We do have the bias to the upside, but we have an upside weakening, mainly because of that 3 lines moving sideways as well. That means it's uncertain of the upward type movement. And we can also see that we have got a wick created at the very top of the mother candle, bullish mother candle at this moment of time as well. So the longer the wick, that wick was quite long in the 1-hour chart, but on the 4-hour chart, it is just developing as well. So that does actually mean that the body of the candle, because it is weakening and basically its length is sort of shortened to leave out that wick at the very top, the weaker the trend is expected to be. So this is what it is, and there's just no trend, it's a lot of uncertainty because of the three lines moving sideways. Now, when three lines move sideways in 3 consecutive time frame, 30 minutes, 1 hour, and 4 hour, we just have got a very unclear and uncertain trend. Now, of course, we've got traders out there that would actually be very tempted in just looking at that single candle movement and wondering that this is a great opportunity to actually buy. Now, I will actually stop that excitement, or don't mean to burst your bubble, but what is really important is for us to also look at price action to the right and line out, or basically highlight the closest psychological numbers as well. Now, I'll just help you with that. Now, when we look at 1.7991 as it goes upwards, we would actually be looking at 1.8000 as a very significant psychological level. We've got 4 sets of psychological numbers. We've got the 00, the 50, the 20, and the 80. So here we're looking at 1.8000. Okay, so 1.8000, and we'll just lay out that line right there, and we'll just want to lay out the 1.8000 as a very significant psychological level that could also mean that prices could anytime be reversing at these psychological levels. So we have got 1 right there, and as we do that, we will also lay out another line that is under the current price. Now, under the current price, the current price would actually be bumping into the 1.7950 psychological level. So I'll just 1.7950. Okay. Now once we have actually done that, we will then get a clearer and better idea of the current location, the current location of price. Okay, so the current location of price is in between the 1.8000 psychological number as well as a 1.7950 psychological number. So here we have got a reason to believe that there is a potential reversal happening very soon on GBP AUD. Now, whether or not you would like to confirm that, now one of the best ways to do that is to insert the stochastics. And stochastics, really easy to use to actually pinpoint to us as traders whether or not we have a sort of divergence, opposites. Now, demonstrate what that means. Now, when I click on to the stochastics, you could see that I don't use it as an overbought, oversold type indicator, but I do actually use it as a divergence convergence indicator. When we have divergence, that basically means an opposite of what you see on the candles, and it is not the same as what you see on the stochastics. Then we've got a divergence. When there's a divergence, that basically means we have got a bit of a reversal. Now, I'll just demonstrate what I mean by that. Now, let's say we have got a peak right here, which is a high, and that high moving towards the current price or the current candle's high is a upward type slope. Now, when we do that the same way we do it on the indicator, the blue line itself, we could see that the slope is the same. Now, because that slope is the same, there is no divergence, but there's convergence. So that basically means on the 4-hour chart, we may not expect reversal happening on based on the 4-hour chart. But as we go on higher, let's look at what we can actually spot. Okay, so here, for example, we have got, let's say we're looking at the lows as well, right? Now, we have got a low that is moving to the upside. So we've got a higher low, and this is the slope that is going upwards from the low to the higher low. Now, we look at the stochastic, we've got this low, similar area, and we look at it going to the downside. So what that means is there is a divergence between the stochastics and the current candlesticks movement, especially on the lows that you can actually see. So there's an upward slope onto the price or onto the candlestick chart, and then a downward slope onto on the stochastic itself. So there is a divergence on the daily chart. So what that means is that there were no divergences on the lower time frame, but then from any time between 4 hour to 24 hours time, we may actually then expect a potential or possible, not 100%, but potential or possible reversal. So that reversal would not happen anytime soon, but perhaps 4 hours after 4 hours or to 24 hours time would then be looking at the potential of that happening. So if we go on to the 4-hour chart right here and we look at the current candle itself looks like it began at 8. So this candle would actually be ending very soon in a matter of 7 to 8 minutes time on the 4-hour chart. So that does actually then, give us the end of that 4 hours. So we would need to be very careful of whether or not there may be a reversal coming soon, because that 4-hour time frame have actually lapsed or passed. And with that, we can expect that, potentially there may be a reversal coming soon, especially when you look at it from the daily charts perspective. Okay, so here we can see that we have got a reversal expected. That reversal would then be on the downside as opposed to the upside, mainly because the overall trend was an upside type movement. So that reversal will be towards the downside. Now, as we look at, let's just get rid of the stochastic for now. And we can see that it's just not worth our time to actually get into GBP AUD a lot deeper, mainly because we don't have that clarity or smoothness of trend, across at least 3 consecutive time frames. So it's just not my cue to actually enter the market or considering entering the market. As we can see, even on the 4-hour chart, it's just weakening for now. And as it weakens and come under the 1.7950 psychological level, then we may actually be experiencing some correction to the downside, especially because we have got quite a number of bearish mother candles to the left as well. That gives us the hint that there are some market participants at this side, especially to the left side of it, under the 1.7950 psychological level. So there may be some short selling of the GBP AUD for the time being until it picks up momentum and then continue its trend to the upside again. So there are some selling opportunities only after it enters the 1.7940 region and below. So 1.7940 would be an ideal selling price as opposed to the 1.7950 psychological level. Psychological levels are usually, reversal signals, and these zones within 10 pips or so of psychological levels are usually areas where the market reverses. So we wouldn't want to actually decide on any entry of the market. Exiting the market, maybe yes, before it reaches any one of the psychological levels, but in terms of entry would actually be more wise for us to actually wait for more participation and momentum before we actually take that decision to enter the market. So there you go, just a bit of an idea of how I would actually be conducting the analysis from a trend analysis, from fundamentals first, picking out the right pair, and then trend analysis, and then some technicals. So technicals in terms of drawing trend line and also patterns and Fibonacci's are usually left at the very end once I am really sure of the trend, and the trend is really clear. Various time frame is giving me that, and also it has actually breached some psychological levels to give me the hint of more momentum pickup or trend clarity. Then I'll adopt or basically apply more technical analysis tools and indicators and various others only at the very end once I am sure of the trend, especially, or have picked the right pair according to the current trend. Okay, guys, I hope that has been clear for you guys, and hope that you have questions for me. Any questions at all? You guys have got any questions? No. No questions. Thank you. Okay, good. So if you guys have got no questions, then I'll end today's webinar here at the GBP AUD that I've given you a sample, an example of how we conduct a trend as well as a technical analysis. Now, with that, I would like to wish you guys a great week ahead, and we'll see you guys again on Wednesday's midweek review webinar. So with that, once again, thank you, everyone. Have a great pipping week, and we will then see you again on Wednesday. Bye-bye.